Let's talk about the American dream. Once defined by a two-car garage, a driveway filled with the promise of mobility and independence, and the idea that anyone could afford to hit the road whenever they wanted. The freedom of the open road was more than just a slogan. It was a way of life, a symbol of possibility and adventure for generations. But today, that dream is hitting a massive pothole. The average new car now costs around $45,000, a price tag that leaves many families stunned and discouraged. And that's not for a luxury vehicle. That's the going rate for a basic family SUV, the kind of car millions rely on for daily life. For many, this number is simply unattainable, pushing them into a used car market where prices are also soaring and the risks of buying an unreliable vehicle are higher than ever. The car, once a symbol of freedom and opportunity, has become a financial anchor, dragging households down with crushing monthly payments, unexpected repair bills, and mounting debt. Millions now face a terrible choice: go without a reliable vehicle and lose access to jobs, schools, and essential services, or stretch their budgets to the breaking point, sacrificing other necessities just to keep their car on the road. How did we get here? It's a perfect storm of corporate greed, global chaos disrupting supply chains, and policy decisions that have turned the car from a tool of opportunity into a luxury item, leaving millions of Americans priced out of the driver's seat and wondering if the dream is still within reach. Why are cars so expensive? It starts with the microchip shortage. Modern cars are computers on wheels, and when chips ran short, so did new cars. Add in soaring costs for steel, aluminum, and shipping, and automakers passed every penny on to buyers. But here's the twist. Automakers realized selling fewer cars at higher prices was more profitable. Discounts vanished, and market adjustments became the norm. The affordable sedan is disappearing, replaced by high-margin SUVs and trucks. Automakers are engineering a market where your only choices are expensive, more expensive, and, are you kidding me, expensive. It's a brilliant business model for them, and a financial nightmare for everyone else. The result? The entry-level car is nearly extinct, and the average buyer is left out in the cold. The average new car payment in America is now over $700 a month, a staggering figure that's quietly reshaping family finances across the country. For a median-income family, that's a financial black hole. Money that should go to savings, retirement, or emergencies instead vanishes into the driveway every month. Imagine a family earning $75,000 a year. After taxes, rent, insurance, groceries, and that hefty car payment, there's barely anything left for life's extras, let alone building a safety net for the future. Many families need two cars just to get to work and school, doubling the burden to over $1,400 a month, just for transportation, before even considering gas, insurance, or maintenance. This creates a permanent state of financial fragility, where a single unexpected expense, like a repair or medical bill, can trigger disaster and upend the entire household budget. The joy of a new car fades fast when it's the reason you can't afford a vacation, a child's summer camp, or even a simple night out. The trade-offs become painfully clear. For millions, the American dream of a house and a car has become a nightmare of debt and anxiety, with families feeling trapped by monthly payments that never seem to end. The car payment dictates the household budget, forcing impossible trade-offs between essentials like food, healthcare, and even keeping the lights on. It's not just about transportation. It's about survival, dignity, and the ability to plan for a better future. The cost of mobility is now a barrier to financial security, turning what should be a symbol of freedom into a source of constant worry and limitation. Sticker shock is just the beginning. Auto loans have become a trap. Loan terms now stretch to 7 years or more, lowering monthly payments but piling on interest. Buyers end up underwater for years, owing more than the car is worth. Subprime loans with sky-high interest rates target desperate buyers, echoing the risky lending that led to the 2008 mortgage crisis. Lenders focus on what can you afford per month, not the total cost, setting up families for financial failure. Millions are locked into predatory loans for cars they can't truly afford. The result is a ticking time bomb, a market built on unsustainable debt. When the music stops, it's the most vulnerable borrowers left holding the bag. The system is selling monthly payments, not cars, and it's pushing families to the brink. What happens when families can't keep up? Missed payments lead to repossession, a devastating event that can happen overnight. Losing a car in most of America means losing access to work, school, and basic necessities. It's a vicious cycle. Lose your car, lose your job, fall deeper into debt. After repossession, the lender sells the car at auction, often for less than you owe, leaving you with a massive bill and no vehicle. This debt destroys credit scores, making it nearly impossible to recover. Delinquency rates on auto loans are climbing, threatening families and the broader economy. Each repossession sends ripples through communities, representing a family in crisis and a hit to local economies. The repo man isn't just taking a car, he's towing away a piece of economic stability. The crisis is personal, and it's growing. Politics plays a big role in car prices. Tariffs on steel, aluminum, and car parts drive up manufacturing costs, and automakers pass those costs to you. The push for electric vehicles is well-intentioned, but the transition is expensive. Tax credits for EVs often benefit wealthier buyers, while automakers divert resources from affordable gas cars to pricey EVs and high-margin trucks. Regulations for fuel efficiency and emissions add complexity and cost to traditional cars. The result? Entry-level cars are vanishing, replaced by expensive EVs and luxury trucks. Politicians celebrate the EV future, but ignore the immediate affordability crisis. The disconnect between policy and reality is leaving millions priced out of mobility. This crisis isn't just financial, it's social. Car debt locks people out of building real wealth, funneling money to lenders instead of savings or investments. In car-dependent America, your vehicle is your ticket to jobs, education, and opportunity. Without a reliable car, your world shrinks, job options disappear, and upward mobility stalls. The divide grows between those who can afford new cars and those gambling on unreliable used ones. For many, every strange engine noise is a threat to their livelihood. The car, once a symbol of independence, now feels like a roadblock. The system is rigged, and the price of entry keeps rising. The auto market looks like a bubble: high prices, easy credit, and long loan terms. Millions are underwater on their loans, rolling negative equity from car to car. When the market corrects, used car values will plummet, leaving buyers catastrophically underwater. A wave of defaults could trigger a credit crunch, layoffs, and a recession in the auto industry. Communities would suffer from job losses and falling tax revenue. The flood of repossessed cars would depress used car values even further. It's a house of cards built on inflated prices and unsustainable debt. When it collapses, the fallout could be severe for everyone. It doesn't have to be this way. There are solutions. The challenges we face with car affordability and access might seem overwhelming, but there are practical steps we can take, both as individuals and as a society, to turn things around. For individuals, resist the lure of the shiny new car. It's easy to get swept up in the excitement of the latest models, but remember, a car is a tool, not a status symbol. Buy less car, prioritize reliability, and stick to a strict budget. Consider certified pre-owned vehicles or well-maintained used cars that fit your needs, not just your wants. Get pre-approved for a loan from a credit union, and follow the 24-10 rule. Put down at least 20%, keep your loan term to 4 years or less, and make sure your total transportation costs stay under 10% of your income. These steps can help you avoid financial traps and keep your budget healthy. On a larger scale, Automakers and policymakers must be pushed to make affordable cars again. The market needs more options that regular people can actually buy, not just luxury vehicles or high-end electric cars. Policy should reward the production of smaller, efficient vehicles, not just luxury trucks and EVs. Incentives and regulations should encourage manufacturers to focus on affordability and efficiency for the average consumer. We need stronger consumer protections, crack down on predatory lenders, cap loan terms, and demand transparency in pricing. Everyone deserves a fair shot at safe, reliable transportation without being taken advantage of. As we transition to EVs, ensure subsidies help lower-income buyers and invest in affordable options. The shift to electric vehicles should be inclusive, so no one is left behind in the move toward cleaner transportation. The goal isn't just more electric cars, it's cars people can actually afford. Accessibility and affordability must go hand in hand for real progress. The American dream shouldn't be out of reach because of a car payment. Reliable transportation is a cornerstone of opportunity and stability for millions of families. It's time to put the driver's seat back within reach for everyone. Together, we can make car ownership practical, affordable, and fair once again.